Stu, what an exciting day we had today. We got to go to the American Stock Exchange, which, as you know, is really fantastic because it's not open to the public.
I'll tell you, Estelle, it really was an experience. It was a remarkable experience, and I feel privileged to have had that opportunity.
You actually got to interview Mr. Peter Quick.
I really did.
The president of the American Stock Exchange. How was it?
Well, let me tell you about it. You know something? I've got a better idea. Why don't we just take a look?
Let's take a look.
Welcome to the American Stock Exchange in the financial district of New York City. I'm Stu Taylor here with the entire Karma Media crew. Promise you an exciting interview and all the thrill of being here at the Amex. I wish you were here to join me, but let me talk about America and the great American dream, aspired to by millions of people, achieved by many. We talk about booms and busts. We talk about the opportunity to make great fortunes in this country. There are the winners and the losers, and of course there are many ways to make and lose money. We talk about inheritance. How about the lottery? Certainly business investment. On top of that, real estate. Of course, there are some down and dirty ways to make it. I think of the great bank robber, if I may use that term, in the 1950s with the Brinks bank robbery. Teddy Green, who was asked why he robbed banks, his response was, "That's where the money is." That's really not the tone and message here today, but more on one of our great institutions, the American Stock Exchange, and Wall Street and how it works. We've had our down times, the Great Recession of depression really of about 75 years ago, Black Monday, 1987, and then we had those furious 1990s where everybody thought there was no limit to where this market should go. We were then brought back to the reality. Those 3 tough years in 2000 as we began a new century brought upon by Y2K, the dot-com bust. Of course, corporate scandals, and we'll address that during this conversation, and what I'm afraid is going to be living with us forever, and that is terrorism, at least in our lifetimes. But it has been a positive note and a positive tone, and here to join me right now, Peter Quick, the president of the American Stock Exchange, to talk about all of this, and we'll all get a great education. Peter, so great of you to join us.
Great to be here with you today, Stu.
It's great to have you, and I just wish everybody could experience what I'm experiencing here today with this tremendous backdrop. But let's find out what this is all about first and what the American Stock Exchange is. What is the Amex and the American Stock Exchange? A lot of people hear about the stock market and Wall Street, and their level of knowledge doesn't go much beyond that.
Well, the American Stock Exchange has been here since 1921, physically in this building. But many, many decades before that, in the 1800s, it was actually outside, and it used to be called the New York Curb Market, a block south of the New York Stock Exchange on Broad Street. In fact, there's a plaque on the sidewalk there saying that in 1921 it moved to its present quarters, which we're in now, which was back in 1921. But the listings here were companies that maybe didn't make the listing requirements of the New York Stock Exchange, but they needed access to the capital markets, and the American Stock Exchange provided that. So over the years, we've had a number of companies that have come and started here and grown, and sometimes moved on to other exchanges. But we've also got other companies that stay here and continue to trade as they get bigger, and we're very happy.
Well, let's talk about some of those companies and the companies that constitute the basis and the lifeline for the American Stock Exchange. You want to elaborate a little bit?
Well, they're all kind of different companies. I mean, you have companies like the large S&P 500 companies like IVAX, which is a generic drug maker, which is worldwide, and providing drugs at a reasonable price to people around the world. You've got Wyndham Hotels, where many people may vacation all around the world. You've got Badger Meter from Wisconsin that makes water meters, that's helping conserve water in Mexico City. You've got companies like that. You've got Gorman-Rupp, which makes pumps, for everything from pumping sewage to the pumps in the soda fountain. So we've got a wide variety of companies here. But we're not just about stocks. We also list options, and we list something that was invented here called exchange-traded funds.
Right, ETFs.
ETFs, yeah. Back in 1983, the American Stock Exchange listed the SPDR, which is the exchange-traded fund based on the S&P 500. So when you're buying that, it's almost akin to buying a mutual fund, except it has a lot of advantages that mutual funds don't have. It has a diversification, It's very tax efficient. You're not being taxed like you are in a mutual fund where you may buy it in the summer and then all of a sudden get a tax bill in November and you've actually lost value. That doesn't happen with an exchange-traded fund. You control the event in terms of the long-term capital gains for the most part, controlling it by selling it, buying it and selling it, and your tax basis is on that rather than some decision of a portfolio manager. And it's also, gives you the diversification, but you also can sell it at any point during the day, unlike a mutual fund, which really gives the investors the convenience.
Talk a little about the mindset, how things have changed. We've seen an evolutionary process go through the times where now we're talking about the elimination of double taxation. We're talking about capital gains reductions, permanent tax cuts. Your philosophical take on that? I know it's hard to take a position here in one sense, but where do you see us going as an economy?
Well, I think certainly taxes is one of the things that drives business. And when you can lower taxes, I think that's good for businesses. And you look at a lot of the companies on the American Stock Exchange, and those companies are the small to mid-cap companies that are actually creating a lot of the jobs in this economy out there. So when you can get taxes down, I think overall that's good for the economy because it benefits a lot of people throughout the United States.
It works for me, Peter, by the way. You think about Amex, the American Stock Exchange, and for people out there who may not be in the market, are looking to investigate it, the immediate things you think of: the Dow Jones, the New York Stock Exchange, the Russell, the S&P, Amex, NASDAQ. There's a lot of confusion. What separates you from a lot of these other exchanges?
Well, I think one of the great things about the American Stock Exchange is our composite index over the last 3 years is up 62%. Actually, year to date, not year to date, but for the first 3 months of this year, it's actually up 8%. And if you compare that to the Dow Jones Industrial Average or the NASDAQ or the Russell 5000 or basically any other major index, most of them have losses. So we're quite proud of the performance of the companies here.
That's an amazing accomplishment. And I commented here in my open about all the things we've had to deal with. And to me, it's an amazing accomplishment and certainly a testimonial to the infrastructure of our financial community that not only have we survived those 3 difficult years, but we thrived in the face of tremendous adversity. And part of that adversity was brought upon, obviously, by the dot-com bust, and I indicated excess demand, excess capacity rather. This is kind of an inverted recession, capacity and demand unlike any other. Our recovery has been difficult to pinpoint because since we haven't had a typical recession, this is not a typical recovery, is it?
No, it's not, because we have historical low interest rates, which is very helpful for folks who want to purchase a house or make other big purchases like that. And yet we're experiencing some of the highest oil prices we've ever seen right now. So it's not a typical time for the economy.
What about some of those other exchanges? Some of the other differences in terms of the NASDAQ? You indicated that you're up 60% over the past
years with
which is a remarkable
equity listings. Yeah.
Are there any other distinguishing characteristics? Perhaps will you become more service-oriented towards clients?
Well, certainly. This is a auction market versus an over-the-counter market where you have many different people vying for the order. And the funneling effect of going to a specialist who acts like a traffic cop but also can participate in the market, and you may also have market makers on the floor too, adding to liquidity. And what the companies are basically looking for is to dampen the volatility and not have wild gyrations, which you sometimes see in the over-the-counter market. And that's really one of the main benefits of being listed in the auction markets, as well as, I think, something we call sponsorship here. We help these companies along, whether it be with the investor relations, or doing a communications audit to make sure that their 10K is in line with what the company chairman is going out and telling to the public, and helping educate these companies that may not have all the resources of a GM or a Coca-Cola. And we have internet webcasts which let the companies get their message out there. We do a lot of things like that which help these young companies get exposure.
Well, I think that it's incredibly important. We live in a society that is so fast-paced we often don't feel we get the attention. When we talk about all the new technology we have to deal with and all the great products and services, but there's such an important component that's missing in so much of the business world today. That's personal one-on-one attention. And I know you're really very proud, you just mentioned it, you're very proud of the service that Amex offers to others. It's important. I know if I'm buying a product or a service, it's just as important for me to be able to relate to the individual with whom I'm doing business.
Yeah, exactly. You know, if you look at the role of the specialist down on the floor, you know, a company CFO or a company CEO can call the specialist, and they maintain a very close relationship. Not to get inside information, because of course that would be illegal, but for the company CEO or the CFO to understand what the trading pattern in a stock is. And with the specialist there to kind of be the traffic cop, it helps. And when you see extreme volatility on some other markets, it just doesn't happen here.
And the message is out. You're giving that message here today in the financial district at the American Stock Exchange. We look at society and cultural phenomena upspring all the time. We live in a very trendy society. I don't know if the analogy exists, but I think back to the days of Charles Keating, the savings and bank loan fraud, junk bonds, and part of these are trends that aren't all negative. So I'm not casting dispersion on everything. Hedge funds, you talk about index funds, you talk about options. Do we live in a let's follow the leader kind of society as far as action in the financial communities exist?
Well, there's certainly when somebody hits on a great product,
Follow the leader a little bit.
you know, people follow the leader. But we've got some more basic problems that I think we've come well to grips with over the last couple of years. And, you know, whether it be the Enrons or whether it be the accounting scandals with Arthur Andersen or it be the research of Wall Street, you know, things that Elliot Spitzer has really pursued. And we need, and I think we've done a good job of regaining investor confidence in this country. And, you know, there were some harsh measures that were taken. There were things like Sarbanes-Oxley, which is challenging, you know, corporate governance, and it's not the easiest thing to implement. But overall, I think it's going to be very, very good for investors in the long run.
Well, in defense of our financial system, which, by the way, has certainly shown its strength in surviving the most difficult of all times, where we've had so many downfalls in the market in the past year, I think it's miraculous that we've reached the point that we have. We're almost back, in reality, to the levels where we were on the Dow back when all of this happened. The NASDAQ, those numbers were never really real to begin with.
You're right.
And yet, I want to follow up here on Sarbanes-Oxley, corporate governance, fiduciary responsibility. Is this a case where even CEOs maybe are forced to sign on the dotted line twice, where perhaps we've gone a little too far as a necessity in order to correct back to the middle to send out a message? And certainly, in fairness, most companies operate with due diligence. Most companies operate with honesty. Sometimes it takes one bad apple to spoil everything, but I think you certainly are able to step forward here and support most of the corporations in this country who operate their businesses with a very high degree of professionalism and honesty.
Yeah, absolutely. If you take a look at what's happened, and you know, with corporate governance, not just the CEO signing on the dotted line, but you also look at the makeup of the boards, and for the boards to take their responsibilities seriously, whether they be on the audit committee or they be on the compensation committee. These are very important parts of corporate governance that, you know, we're not probably taken as seriously by not everybody, but by enough that we need a drastic overhaul.
There are some pitfalls that we all have to deal with. I was talking with you, before we went on a recent trip to Washington with my family. It's frustrating when you can't take a tour of the FBI or some of the buildings that were open to the public. It's just the reality of our times in dealing with the constant impending threat of terrorism, and we've dealt with it very well. I think it's built into the markets in Israel, it's built into the markets in Ireland, and from the reaction of the market here, certainly in the past year and a half, it has been built into this market. But that doesn't mean that there's free access. For example, you're not really open to the public here, and you have to take the measures that are necessary. What are some of the measures that you've taken here at the American Stock Exchange in the interest of protecting not only your security, but the security of the American investor to guard against these kinds of terrible possibilities.
Well, Stu, you're exactly right with regard to, 9/11 changed the way we've got to look at security. And this building, in fact, only being about 400 feet from where the South Tower of the World Trade Center stood, we know probably better than most what it was like on that day when the buildings came tumbling down, because we were here. And the security measures that have been implemented since is really to make sure that Al-Qaeda and other terrorists aren't able to disrupt one of the best markets and best economies in the world here in the United States. And whether that means we've taken measures with regard to creating alternate trading floors so that if we did have a problem here, we could continue trading elsewhere, or duplicative computer facilities. We've had to take those measures, and they've had a cost, as well as the physical security. But it's imperative that we create a safe place for folks to work, as well as to ensure that the capital markets continue operating in this country.
Well, I've experienced that myself. For those watching here, with the security necessary for me to have the privilege of this interview with you today, Peter. And in terms of volume on the American Stock Exchange, perhaps some of the components that people may be unaware with in terms of trading, any statistics you can give out to shed light on that in comparison to some of the other exchanges?
Well, on any given day, we could be trading 70, 80 million shares of exchange-traded funds and equities down on the floor. In fact, the QQQ, which trades here, is perhaps the most widely traded security in the world, as well as the SPDR, which is the S&P 500 ETF, and the Diamonds, which is the Dow Jones Industrial Index. But we also have other stocks. What you need to realize is that probably about 60% of the stocks in all of the markets across the board, the New York and the over-the-counter market, trade less than 100,000 shares a day. So that's why we are such a big proponent of the specialist system, because when something trades under 100,000 shares a day, you really need somebody there to help manage and dampen that volatility that drives investors and sometimes CEOs of companies crazy. So we also do probably anywhere from a million plus contracts and options on a daily basis. And that's a little more sophisticated than the straight equities, but it's an important investment vehicle for folks in America.
Okay, some good advice out there for people listening. I'm going to put you on the spot. I perhaps shouldn't do this, but let me try it anyway. I don't want to have you put on your financial analyst cap or your chief investment strategist cap. My theory is one of the reasons that we haven't quite seen, and perhaps we're on the precipice of seeing it now, the resurgence of technology, is that people are still scarred and burned from that precipitous drop in the NASDAQ market. Yet technology is sound, and I kind of relate it to when we laid down those railroad tracks many, many years ago, and that it took a while, or perhaps $90 billion of cable laid down, and we've utilized maybe $2 or $3 billion. We're in a highly progressive technological market. We're moving forward. Perhaps a quick take, or if you don't want to, on where you think we're going in technology, healthcare, financial services, and other areas, without giving any specific recommendations.
Well,
I don't want to get you in trouble on that.
Yeah, you just look at technology, and I look at the technology in the 4.5 years that I've been here at the American Stock Exchange that has changed and that we've employed, whether it be through communications, through wireless communications, or just different screens, or actually the software itself to run the systems. And the only constant in technology going forward and in the past is that change is constant. And technology, you look at technology and you look at the overvalued stocks. I think you harken back to when the automobile was first created, back around the turn of the century, and there were literally hundreds of car makers. And today, it's all boiled down to a few. You've seen that happen in the auto industry, and I think you'll see that in the technology sector for different parts. As far as healthcare is certainly one of the largest expenses for the American family out there. there's been a lot of progress in different operations. If you get a hernia operation today, they can
Had two of them.
they can go in and do it, and you can be out golfing, a week later. So we've made progress there, but we need to keep the expenses, and generic drugs are very important in terms of the expense cost of healthcare. But you look at things like cable and what we receive in our home with regard to information. You can get movies on demand. You can get all kind of information that you could never get before. So
It really is unbelievable, and following on the growth of the markets and the fact that there's a resurgence. I commented on this earlier. I think it's truly remarkable to everybody involved in all of these markets that in spite of these horrendous times that we have had, we're looking at a rather solid infrastructure. Yeah, we're dealing with high oil prices. Whoever thought we would have been talking about $50 a barrel?
52.
52, over 50. I don't know where we're going to be wherever this is.
Yeah.
But over 50, and who knows? There are some who say when it goes to 100 or 150, if it doesn't happen all at once, we'll be okay. But we're really talking about terrorism, which is a component built into it. But most other indicators should seem to say that, if you look back on the history of the market and the returns that you produced, we've got great and glorious times ahead. PEs, the E's are up, the P's are down, we're coming back to profits. Corporate expenditures, investor in CapEx, it's occurring. The overall mentality, the fact that there's been a tremendous resurgence, that we've been able to control with the Fed's help, both through fiscal and monetary policy, inflation and deflation, and create the balance, and that we've hopefully learned from our past experiences. I sit here from a logical standpoint, trying not to be overcome by emotion and say, my goodness, the outlook certainly on all the markets in the American Stock Exchange should be extraordinarily bright.
Well, I think, there are always good investments in good markets or in bad markets. And, whether or not you're betting the market, investing in an ETF, or you like some component of technology, or you think that home building is going to take off, as it has actually, and continues to do very well, and that's going to create demands for different products that go into a home. There'll always be times like that, and there's always an opportunity out there in good markets or bad markets. But I believe we've got a lot going for us in this country right now, and I think better times are ahead with regard to the markets.
Put you on the spot again. I'll apologize in advance. We see now how corporate boardrooms work, and it's so different than the way it used to work. We used to talk about 5-year plans, 10-year plans, and we've seen everything compressed into shorter periods of time with our tremendous ability to deal with new innovations, new creativity, and technology. So it's difficult to have 2, 5, 10, 12-year plans like we used to have. Your views in terms of where you see the American Stock Exchange in the short run, the intermediate run, and the long run. Maybe you can't answer any of those three, but I'm certain you have a perspective on it.
Well, the history of the American Stock Exchange, besides being an equity exchange for small and mid-cap stocks, is also innovation. Whether when we started trading options back in 1975, or we introduced the ETFs in 1993. We've got a couple of products, in fact, down at the SEC right now being reviewed, and hopefully we'll get those out to investors. There's a product on the options. There's also actively managed exchange-traded funds, which we think will reduce the cost and let more money go to the investors than present investment vehicles. So we're looking forward to a lot of exciting things like that going forward.
Well, it sounds like a great future. Any closing comments you feel you'd like to make?
No, it's great. I wish Karma Media great luck, and hopefully look forward to the day when they're going to be listed on the American Stock Exchange.
Well, I'm looking forward to that day too, and I certainly thank Karma Media for allowing me this opportunity, and certainly it's been a great pleasure with you, Peter Quick. Thanks a million.
Stu, thank you.
This is Stu Taylor from the American Stock Exchange in the Financial District of New York. So long.